What's going on, guys? Welcome back to the Coinist Podcast. I told you I'd be putting out these episodes every single week, and I can't let you down, especially with the market this hot. This week is no different. I have on Willy Woo. You might know him on Twitter as Woonomic. Think of him as the father of on-chain analytics, also the creator of the MVT ratio for Bitcoin. Right? If you haven't seen his charts, if you're unfamiliar, we talk about how on-chain analytics started, how the MVT ratio started. We also look at something towards the end of the conversation called the 10,000-year view of Bitcoin. I've never had another analyst talk about or think about Bitcoin with that big of a view, and we break down what he's thinking there. So he has a really unique perspective on how to value these things, on how to think about them, and then also how you can use that to add an edge or understand more when you're investing and trading. So I really enjoyed this conversation. Willy, thank you so much for coming on, a nice fresh perspective on the asset class. Before we get into the show, thank you everyone for listening, liking, retweeting, all that. I love you guys. I do have one quick message from my sponsor who does also make this show possible, and that's Bybit Exchange. If you haven't checked them out, I literally don't know what you're waiting for. The link is right down there. If you're listening as well, you can head on over to venturecoinist.com/podcast, and it's right there. They give you a free $10 just for clicking on that link. So if you make an account right there with that link under the video, you get a free $10. Check out the platform. Who knows? Maybe turn that into some money, or you just want to check out and see how the platform works. Either way, it's a nice little bonus. Also, if you deposit 0.2 Bitcoin, they'll give you another $50. Right? So that's a nice little bonus just for checking out their platform. It's a way to entice other users to actually use that new exchange, to see what they're offering. And I think you guys are really going to be impressed. The other thing they're doing when you do check out that platform, if you have any questions on Telegram, on Twitter, they're incredibly active, and they also have a 24/7 support on their platform, right? A chat, which is kind of unheard of in crypto. You can actually get help from the team. So that's pretty nice. When you get there, you also might realize a couple other differences, which are huge on Bybit, and that is they don't have overload. If you're a trader and you've been trading these Bitcoin swings and trying to get your order filled one day on another exchange, maybe you hit buy and it says overload, or the exchange is down, or you can't log in, or whatever it might be, Bybit has no overload, and they're continuing to work to upgrade the platform, to continue to increase liquidity and have no overload. So they're actually taking into account what traders want to see and fixing those problems that are prevalent on some of the more popular exchanges. The last thing, they have some contracts and some products there that you really can't find anywhere else. If you're an XRP fan and you like to buy and be long XRP, they have that for you, XRP USD swaps, and then they also have XRP USD swaps for the people who don't like XRP. So you can long and short XRP on there, and they have some EOS contracts as well. Bybit is doing a ton to improve the trader experience. I do think you guys should check them out. Once again, the link is right down there. Smash it, get a free $10, deposit some money, you get an extra $50, right, for checking out Bybit. Thank you, Bybit. And the other sponsor for the show is Glassnode. If you're listening to this episode and you want to learn more about the MVT ratio, or you want to impress your friends on Twitter with some very cool charts, glassnode.com is your site. They're the space, the premier player to get on-chain information about Bitcoin, Ethereum, understand how much money is going through these networks. The other thing that I think is really cool, you just go to their website, glassnode.com, click Studio, it's free, you don't download anything, and immediately you can see how much money from Ethereum just was sent into a certain exchange, or withdrawn from a certain exchange, or how much money is changing hands, or how many new addresses. All the statistics that you would want to know about the new fundamentals for this new asset class is on glassnode.com. Do check them out. Appreciate both those sponsors, both especially relevant with Bitcoin moving the way it is. Check out Bybit, and to understand what's happening, check out glassnode.com. That's all I got. Let's get into the show. I don't want to waste any more time. This one was so much fun. Hopefully you guys enjoy it. Appreciate all you guys. Have a good day and enjoy. Welcome, Willy. Thank you so much for coming on, man.
Yeah, thank you. Thanks for the time, Luke.
Where I caught you right before you're about to head off on a trip, or you just moved. Where are you at now? Where are you calling in from?
Yeah, I'm calling in from Bali. Bali's kind of like the place that I go to a lot. I spend about 4 to 5 months of the year here. So I've just had just over a month in Bali, and I'm about to head over to Thailand, and then after that, Hong Kong.
Good deal.
So
You're probably always moving. I see you on the streams with Tone sometimes. Like Tone's in a different location every week. Willie's in a different location every
yeah,
week.
it's a little bit. I think it was like 22 countries last year. So no, I really love it. It takes it around a bit.
That's insane. What's home though? Is Bali home for predominantly? If you're not traveling, like where are you going to be?
That's a really tough question. I always say I spend about 4 to 5 months in Bali, and then the rest is on the circuit, really. Yeah. So actually, like later on this year, we're gonna look at Europe as being a base. I'm really liking Portugal. So yeah, we'll see.
Okay, very very cool. The reason I
Mm.
wanted to have you on, I've always try to keep the topics relevant. Obviously, been studying and looking at your work for a long time, but it's especially relevant given Bitcoin's recent run up. And there's so much we want to talk. I want to break down. You have a lot of recent tweet threads on it. But first off, I want to give you a little congrats to launching Adaptive Fund. What's that like? I know I asked you right before. So it's a bit hectic right now, but how's that going? Or are you guys fully live, or what does that kind of look like?
Yeah, thanks. It's we're launching 1st of July, and so it's been in the works for a while now. Murad and David Prill have been the spearhead behind that, and um, so yeah, it started off relatively small, and it just has been steamrolling, and more interest has been coming in. About 6 months ago, David approached me in conversation with Murad, and we started jamming, and it's been awesome fun, awesome productivity, and so that sort of breached it, sort of started our relationship of working together, and because it's been going so well, they asked me to come on board the fund, which normally I'm pretty skeptical of, but just the caliber of the people that these guys are awesome. So
Yep.
I I joined, and I haven't joined much in my like time in crypto, and it's been quite natural. So it's been great. This month has been this last minute flurry of fundraising. We announced it last month to the public, which created a lot of interest, and so it's been pretty full on for the entire team. But yeah, looking forward to getting the fund launched, and so we can just focus on the markets.
Focus on the markets and probably catch some rest. For people that are unfamiliar, so you kind of pioneered a lot of the on-chain analytics, and this is a fund focused on on-chain analytics as well, where the strategies are driven by those. Are you guys doing any VC as well, or is it mostly, it's pretty strictly on-chain analytic focused?
Yeah, it's definitely not VC. We're not deploying into equities, but it's very much into the high liquidity stuff. So predominantly in Bitcoin, US dollars trading. We we will have an allocation that goes into altcoins through sort of staged entry points during like this current cycle. We're launching it on the bull cycle. So as people that have been in crypto a while, altcoins do get a they do get leverage on top of Bitcoin sometimes if you time it correctly. So it's a nice way to get this kind of leverage without having the counterparty risk of having your money stuck in an exchange. And yeah, but definitely not a venture fund.
Getting back to the origins, away from the fund a little bit, the origins of kind of on-chain metrics as a whole. I believe you pioneered, right? You first tweeted it out. I was trying to scrape your tweets. Was it February of 17, or was it earlier than that? Is that when MVT started?
Yeah,
Like, how did
that was it.
how
Yeah.
did it all begin? What's kind of the origin story there? Rather than asking you how'd you get into crypto, we'll hit that story too. But this is pretty interesting because this is an entire new concept that you came
Mm.
up with. How did it all start?
It was funny because like we had this community here in Bali back in 2014, and we had these meetups, and my buddy Gary said, hey, does he want to help me with this meetup? Because it was done like a show, really. It would cover all the news points. And I said, yeah, I'll come in and I'll help him do like a 10-minute slot. And I thought, I like numbers, so I'll do number of the week. And I remember going to blockchain.info's website because they had all these charts, and I would be going, oh, I got to pull some numbers out to present, so I had my head in numbers all the time. And like probably one of the first discoveries I made just looking at their charts was how correlated the underlying value flow on the blockchain was to the market cap. And so when I put those charts against each other, that showed this really nice correlation. And people, yeah, I was like, if you put the ratio against each other, I sort of thought about it, like, she's like, these two things just followed each other, and if you put the ratio on it, you think one thing is like this underlying activity that's on, when you think of it, I started thinking about what it looks like in stocks where we have this price earnings ratio where we value companies with some underlying activity within the business,
Sure.
often earnings. And the only thing we've got really for Bitcoin is the flow of capital. Because I used to think about the flow of capital. If it was PayPal or VisaNet, you could ascertain the profits of that company by looking at the throughput of activity going through the payment network. And because Bitcoin supposedly was a payment network, I thought, well, that could be the proxy. And so the first description of it was like a price earnings ratio. I mean, ultimately now, years later, I look back about it and it's completely naive, and it is not a payments network, and it works on something completely different. But that's how the chart came up, and it was useful. It was useful in terms of reading the bull or bear market, whether it was overheated or not. So that's how we came to it.
Very cool. Would you say it was more the chart was more of an attempt to understand what price was doing, or were you more just looking to understand kind of how much value is passing, and you weren't so interested in whether or not the value happening on chain was actually driving the price? Like, was your goal to find a metric that could help you value, or was it more just like what is happening on this thing, how much activity is there, just kind of like a really raw deep dive into what's happening?
Yeah, it was just kind of like a thought experiment. If there is such a thing as a price earnings for Bitcoin, then here it is. And then, like, this is one of the things I find is when you start this thought experiment, you start to think of it from different angles, and then I mean, like, often people describe, I have this goal and I want to get to this end point. But for me, this entire journey is always one driven by asking a question, finding a sort of an interim answer, which opens up two or three more questions. And
Hmm.
it's just kind of this magical tour of going, oh, you're just following curiosities and questions, part answers, and that opens up more questions. So I wasn't trying to get to anything other than just trying to understand what answers were coming out. And I mean, for MVT, it's gotten quite deep now.
Hmm.
I understand what drives it, which is really, I mean, I haven't even written it out in an article yet, but really what's driving NVT is a thing which I'm calling like the quantity theory of investment. And like we're so used to, like economists are so used to looking at economies at this kind of view where on the one hand, we've got all the goods and services being circulated, sort of like your gross domestic products. And then on the other hand, you've got this money supply and how quickly it circulates to pay for the goods and services. And it occurs to me that this is completely beside the point for something like Bitcoin. What we have is like a theory of quantity around investment, and that's what MVT describes, the velocity of the investors coming in. Yeah, so I won't necessarily need to go into it in this way, but what I'm finding is that, like, as we go down this world of blockchain, we're starting to think about things quite differently. And, for example, an economist cannot come in to an economy and essentially look at the flows going through our bank accounts. A lot of privacy around that. So, um, so like if a company or a person buys, into an investment, that doesn't reflect in GDP, because that's not a goods or service; it's an investment. And so this whole bit of investment is completely dark inside the normal economy, whereas within Bitcoin we see that, and we see that at very high resolution. And actually, that's led to this whole realm of on-chain analysis, because it's predictive on price.
Sure, an entirely new class of fundamentals that just didn't exist. I do want to get into the evolution of that and what kind of, us being able to, or you being able to look at the lifeblood of the Bitcoin network, as opposed to we can't in the traditional financial system. But first, what were you doing before you went to that meetup and came up with MVT? What's the origin story there? Were you just interested in Bitcoin because you had heard about it, or, because that was relatively early, that was 2013, 2014.
Yeah. So I'm an engineer. Okay,
Okay.
I dabbled with computers since I was like 12. Used to code, taught myself to code, but I ended up forging a career in designing products. I designed medical products, and then when the .com boom happened, on the tail end of it, I got interested in early mobile tech. So I don't know if many of the listeners here remember the Palm Pilot. So
I
it's all
even
that
remember.
early
I even
way.
remember the Palm Pilot, and I'm pretty young. I think
Oh, well,
my
there
dad
you
used to
go.
have some Palm Pilots. That was like before the BlackBerry almost.
Yeah. It was
Yeah.
like BlackBerry was successful, but these things, they're digital organizers, and like I've always been attracted to bleeding edge technology that's not ready, and it's just fun. And so that caught me with a passion. So you know I went traveling. I actually went backpacking around the world with one of these Palm Pilots, trying to use it every day as my personal computer, like you would a smartphone. This is like what was it, 99?
Yeah.
Trying to use it like an iPhone. It was my only tether to the online world, to get my email, right? So long story short, that propelled me into the world of startups. And eventually, like the company that we did was actually email, because that was my lifeblood. Was I was backpacking,
Hmm.
and we ended up creating the pretty much the industry dominant email client for that platform, which became email software on smartphones when they became 3G and mobile phones. And so that was my introduction to tech startups. And I was working on my third startup when one of our engineers said, "Oh, Bitcoin broke $1,000," and I'm like, "Oh, what's Bitcoin?" I never heard of it. And that was like December 2013. And then I had a thought about, he told me it was like this. I did a little bit of reading. He told me a little bit, and I was like, "Oh, okay, it's like gold but digital." Okay, so the iPod took 12 years from when we had MP3 to now being in everyone's hands. So
Hmm.
I'll give it 12 years. Um, and I felt like we were in 2013 MP3 kind of phase.
Yeah.
That's that kind of early mucking around. I was like, well, if it beats gold or matches gold at $8 trillion, it's probably $400,000, and I'll give it 12 years. And so I went out and bought one Bitcoin. I put some cash into some random person's bank account, and he sent me a Bitcoin. And then I thought nothing of it really until maybe 6 months later, when I flew to Bali to spend some time there, and there was this whole burgeoning economy in Bitcoin. Actually, there was a lot of merchants there. There was some real activity, and they told me what this thing was in all its entirety. And so I went down the rabbit hole then. So it wasn't till many, like, it was opposite to most, I heard it, bought it, and then didn't find out really what it was till 6 months later.
Until later. Yeah.
Yeah.
That's
Yeah.
true. It's the opposite. It's the opposite cycle for most, me included. I think most people probably hear about it, want to buy it, or kind of learn about it, and then 6 months later say, "Why didn't I buy it earlier?" You kind of you dove in and then figured it out on the way.
Yeah, I should have done that because it was bear season. Remember, we peaked at December
Okay.
2013.
Yeah, buying the top isn't so bad though when the top's $1,000, and we're sitting at 8 or 9 right now.
Mm.
So getting back to kind of MVT and as it's evolved, I know if you were already working in tech, and also since you're able to see, I think you described it as kind of a lifeblood where our normal financial system, you can't see into these things. With MVT and with Bitcoin now we can. How is NVT evolving? Are you constantly iterating as kind of a new thought experiment, or are you looking at, whether or not it's MVT or whether or not it's, any of the 20, proprietary charts that you have up there? They're all fascinating. I'll pull some of them up, but are you kind of iterating and changing them as maybe you see they're not working, or you see they could be revised, or is it just kind of a constant tweak already as it is?
Yeah, it's a dynamic field. It's constantly, we constantly have to revisit everything. And we're creating a lot of stuff as well, constantly. So MVT really is just on-chain volume.
Hmm.
And of course, that will no longer hold the level of accuracy that it has as the industry progresses. We've got side chains that are going to take some of the volume off that chain. We'll see Lightning Network come on, but even more importantly, we can't see the investment activity of what's happening off-chain.
Off-chain,
Like MVT was created still probably off the time in which, from probably I'd say 2016, we had all this backtrace of data where it showed a lot of accuracy.
yeah.
We had like a lot of this. Remember, Mt. Gox went down with 1/8 of all coins in circulation stolen. So that's a bit of a blow, and a lot of people and the whole community, rightfully so, took their money off exchanges and put them on chain in their wallets. And so, like, I think what we're seeing now is more and more trust going back to the exchanges, since the amount of hacks are now reducing and the convenience is there. So a lot of investment activity is happening off chain. We're starting to see more and more larger and larger over-the-counter trades between high net worth individuals, and we need to do a little bit more research here, because we don't know what percentage of that comes through on chain, because it could be just a database entry it's all just sitting in cold storage through a custodian. So I think that we're starting to lose some signal, constantly we need to look at impacts to that and maybe adjust it. But also there's other indicators that we can use outside of the volume, or augment it with different types of ideas.
Sure.
So yeah, it's a constant ongoing process.
What's going on, guys? Hopefully you are enjoying the podcast so far. Hopefully you're enjoying this episode. Like I said, the second half of this is especially interesting when he starts breaking down the ways that on-chain analytics needs to change to keep up with the space, the different ways that you can be using these tools. And I want to give you one quick message from my sponsor, Glassnode.com, which is a company that helps you do just that. So if you're interested at all in understanding the MVT ratio, or understanding the Bitcoin blockchain and how many transactions are happening, or how many new addresses are happening, right, that might help you understand whether or not new people are coming into the space. You can also look at, for exchanges, whether or not massive amounts of ETH are being sent or withdrawn, and different tokens like that. How much value is actually passing through each network and how healthy the network is. Check out Glassnode.com. You guys cannot miss this. It's free. The link is down below. If you're listening to this on iTunes or Spotify or SoundCloud or wherever you listen to these podcasts, check out Glassnode.com. Not enough people know about this. It's a site that now that I'm working with them, once I found them, I check it all the time. Right? You can learn something new literally every single day or impress your friends with a cool new chart. So glassnode.com has everything for you. Just click the studio right when you get to their site. It's all free, no download, and you're going to see some metrics that'll blow your mind. So hopefully you guys enjoy Glassnode. It's a really nice resource. Thank you, Glassnode, and I hope you guys enjoy the rest of this episode. It's pretty fun. Be sure to check it out after the show. All right, let's get back to it. And you have MVT Signal. I'm just picking up on the word signal there. Is that any kind of is that just an iteration that someone else has, or a derivative, or is that actually an attempt to kind of mitigate some of these new developments? The MVT Signal.
No, it's Dmitry Kalichkin did that, I believe 1 year later. So after sort of like, I mean, I published October on Forbes, and then he 4 months later did the faster reacting one. So that's what it is. He changed the makeup of it such that it could be more useful for a shorter time frame, because MVT on its own front tends to gives you a good view of the macro view of the entire market, bull bear, where we sit within that. And he created one that used the 90-day moving average, and it just tended to react faster, and it's been very useful as a trade indicator, but I wouldn't say that is taking on any more signal from anything else to try and correct for some of the changes in the industry. And you can actually see it for the adept listeners there. If you look at MVT Signal, we got very clear and crisp short and long signals, and then it's almost like, as you know, I've done about 12 calls on my Twitter stream with that signal. But as you can see, as we get further and further into the year, those signals became less crisp, and like I think we got a short signal, and that was at the 6,000 mark, and it just sort of went into limbo for another month or more before it finally crashed. So I think, like, yeah, the signals are as soon as a signal is out there, it's often traders get to use it, and therefore the signal will degrade because the information asymmetry starts to degrade with it.
Yeah, so I was curious about that, about your motivation to make almost all your research publicly available and free. So I know that's definitely part of the ethos of the space as well. It's kind of a revolution in a lot of different ways. And all the information is out there for free. All the information is public. A lot of things are open source. So you're making this research free, but at the same time, by sharing everything you're working on, let's say you come out with something new tomorrow, the second you start sharing that and other people start iterating on it and start implementing it, the edge can kind of fade there, or if more people are factoring that in, that kind of gets whittled down. What are your thoughts on that, or kind of what's the motivation there? Is that even a thought to you, or you're kind of think it's just such a beneficial? It's kind of a net win for everyone.
Yeah, I mean, in those early days, I mean, there's so much excitement when you discover something new that you really do want to share it, at least for me. And I certainly wasn't running a fund or anything. So, and it's an interesting one if you were to look at this logically in terms of what benefit would you get. You may have a signal and it may or may not be great, and you may or may not make money with it. But let's assume you can make money with it.
Sure.
You can also weigh on the other side. If you share it, you get this other thing called reputation.
Yeah.
And that counts for a lot, especially in a new space. And I think the game theory with it, I'd say it probably, when in such a nascent space, the reputation is possibly worth more than the money you'll make with that trade signal, especially when these are early things,
Sure.
Yeah, and you see this within the space, everyone's sharing.
Yeah. Yeah, it fascinates me. I know Travis Kling just launched Ikigai, and they have I forget what their new library is called. And then you have your Woo Bull with all these different charts. I just love to kind of see the free libraries. Always fascinated by people's motivations there. But I think that makes a lot of sense in terms of you're playing the long game anyways. You've been here for a long time. You're kind of a macro player anyways, and you already said you'd give it 12 years. So I think the long game is probably more important there than any type of short-term financial gain.
Yeah, I agree. And I think it's great. I just enjoy in this space where people aren't sort of keeping cards close to their chest. And a lot of the stuff is interpretation, you know. You
Yeah,
can put the stuff out, but you've got to figure out how to interpret it.
exactly.
Um,
Exactly. Let's see. Oh, okay. So I wanted to bring up with kind of the recent run with MVT. I want to bring up one or two of your recent threads. Right. So we have the run up that just started pretty much April 1st. I guess you could say it started sometime in March, but we've ran from now 4,100 to about 9K. We're like 9,300 today. Every single time we've dropped, it's been a higher low. Right. This is a very, very quick run up. I actually think it's a lot of people are saying it's kind of like a hated run up because it's mostly institutions driving it, or not a lot of retail, not a lot of new people coming in, but the price is rising, and some people might not be on board. You have a thread on this back on June 5th or earlier this month, and you talked about organic investor inflow like this is unseen, where the price of Bitcoin is outpacing the investor inflow. And it hasn't happened like this since about 2013 or 2017. What does that mean? I'm pulling up the chart with the MVT. So price kind of outpacing what should be happening based on-chain metrics.
yeah, so if you were to look at all of the past setups where we come out of this long bear season into an accumulation band, you'll notice that, like, I think the chart that we're talking about is MVT cap, which is really a visualization of the investment flow that's going through the underlying blockchain and how that maps back to a price domain.
Mm-hmm.
And what you see typically is that you know, everything's bearish, and then this MVT cap is like three moving averages, and they flip, right? These are the moving averages of the on-chain investment flow, and they tend to flip, and the shorter term ones move upwards, and the medium terms in the middle, and the lower terms are laggy. And you know, they flip from a very bearish moving dynamic. They flatten out, and then they flip, and then they go up, and they go up, and then price follows that, because the you know, the investment flow goes in, and then price follows. And
Mm-hmm.
what we saw this time around was it flipped, and but it flipped after the price went,
Yeah.
you know, mooning, right? And the interesting thing, you know, I'm like almost 100% certain that this was an institutionally forced move, because when you look at the 4,300 breakout, that was done at a particular time in the day where the volume is the lowest, so it's cheapest to break the price out. And then we saw a succession of you know, short squeezes, where you could have a lot of buying power that would override the majority of the market that was short, in which case, when you have the whole market's short, it's very cheap. Oh, sorry, very profitable to buy out their position, cause them to liquidate and cover themselves. And we had cascades of this going up and up and up, and and you can actually see that with the positions. Whenever it was everyone was going short, it would get squeezed, and it went all the way up to kind of or around the 8,000s, where the market switched to going long, and
What is
that's
it?
when we settled sideways.
It's like
And
8,400 area.
yeah, it went sideways, and that was a bit where I was like, not sure what's going to happen at this point, because previous to that, everyone was short, and it was just a no-brainer that it would just break through more and more of these sort of resistances. if you were playing that, counter trade, and going with the squeezers, the ones with enough power and buying power to push the price up. Now, so where we are right now is kind of like I'm not even so sure, because I think the market sentiment is now switched to so bullish, and I can see that the short term. If we were to look at the really short term MVT caps, I've got even shorter terms within my own charts, and it does show that there are investors that are buying and chasing this, and we also got charts that are showing that it's retail that is chasing it. It's not the big whale purchases where you pick that up by just seeing the average price of a transaction. A transaction on the blockchain is an investment typically. You would, when the whales buy in, they tend to be very, on average, high value transactions, and that's not what we're seeing. So one possibility is you include that the public, the retail, are FOMOing in, and the whales are waiting and sitting back and waiting for a pullback. The other alternative that should be considered is that at this point now, because the price led the what we saw on chain, is there could be a change in the way in which the high net individuals are buying. If they're buying over the counter, traditionally when you buy over the counter, you pay your money and then you get the coins sent to you. If you're going to use like a custodial provider, like we're hearing that like you can now buy the coins, and the coins don't even move within the address because it's just a movement within the ownership database.
Yeah.
So if that's the case, and I don't have enough information about that. Certainly one of the things that we need to research as a fund is that would explain that the price is running up and outstripping the investment volume, because the investment volume is not being recorded on that chain. And so,
Just from a market psychology standpoint, how do you think that ends up in terms of if price is outstripping kind of investor inflow, and then add in the fact that this run up, and you can't even call it a small run anymore. We started at like low 3Ks. We're at 9K. This is almost a 2 or 3X. With institutions kind of driving that, or a lot of signs pointing to institutions driving that towards the bottom, and now retail jumping on late. What are your kind of thoughts on the health of this trend? Is this an actual trend that could last through 2019? Are you saying this is an all-out bull trend, or does it kind of make you skeptical, given that price is outpacing the investor inflow, and it could just be institutions that kind of cause that in a perfect kind of scenario to pump?
Yeah, I don't see it as healthy. I keep thinking about Travis at Ikigai. He's talking about how Wall Street works, where the bullies on the block, the quant funds, sit there waiting for the retail to come in. It's kind of like the retailers come into the schoolyard, beat up on them, then they go home all beat up, and then they wait for the next one. So it's I feel like that. It's like you've heard Arthur Hay be on this show, and I think it was him that quoted 99% lose on BitMEX, 1% win.
Yeah.
Typically in markets, it's 90% lose, 10% win. BitMEX 99% lose, and that tells me something about the actors on that exchange. And so it's not good, because I'd like to see a very broad distribution of coins worldwide. I think that would be one of the key metrics for Bitcoin success. And now that, in my reckoning, since 2017, we've had the arrival of the quantitative hedge funds secretly position themselves into the space and apply price control over Bitcoin. And I can see that in many ways in the data. I can see it not only in the fractals, the organic shapes that we used to have in Bitcoin are gone. They're straight lining. They're starting to look like Forex charts. I can look at the ratio of exchange volume to the ratio of on-chain volume, which for 10 years, well, whatever, 8 years prior to 2017, from our 2009 to 2017, we saw this really nice sort of correlation. You know, the ratio of the amount of trading happening on exchanges to how much was flowing on the blockchain really kind of followed each other according to the volatility of the price. You know,
Sure.
obviously when it's volatile, it's good to trade. Since 2017, we saw this huge deviation. It widened and widened and widened even further. Never mind if Bitcoin was not a good time to trade. And that just shows me that there's a lot of bots in the game trading, putting a lot of volume. And these aren't just the fake volumes. I'm talking about when you take
Legitimate.
the legitimate exchanges that aren't faking the volume. So, and you can see this deviation from 2017. It's also the same point in which you see the price patterns change. And so, like where we were at that 6,000, man, I'm looking at that as like one of the biggest setups in the history of Bitcoin. It's like, this is how I saw it. It was like, okay, MVTS says short. Okay, the organic price action should be short. It held up there. I'm going, why did this thing hold up at this price range? We know we've been seeing that one of the strategies you can use is shaping the order books, providing a lot of buy wall and sell walls. You can sort of ring fence the price. And I'm like, at the same time, we saw a whole lot of people exit Bitcoin. You can see the exit on chain. You can see the age of those coins, and we saw a decent amount of dormancy destruction, meaning that some of these older hands, the richer hands, get out, and then the whole thing dropped, and it way overshot, and then at the bottom, like it was just cheap coins for everybody. And I just see this as, you know, more and more gaming happening to the price, and that was nothing organic whatsoever. I mean, if you look at the MVT caps, that sort of tracks what was happening organically, and what you see is a robot horizontal arm and then a cliff. And so yeah, it's a fun game for all right now, and I just advise people don't trade Bitcoin, hodl. Don't trade it unless you think you're going to be the top 1% on BitMEX. Yeah.
Sure. One of the things I want to get to before we get to the hodl waves, and because there's also, I had Delphi Digital on here, and they did a really interesting study in terms of coins that were leaving those older addresses and going to newer addresses. But do the transaction volume on chain, is that looking healthy just by itself? And you talked about how that volume figure used to correlate pretty closely with trading volume on exchanges, right? They had moved together. Now trading volume on exchanges massively kind of left the ballpark, and on chain is still kind of where it was. Is on chain look healthy though? It's still growing at a pretty good rate, or what do you see there?
I'll tell you what, it's not right now as high as it normally is to be in the super healthy zone. It's nuanced. So right now, the pattern in which the on-chain volume is carving out has carved out what I call the heartbeat signature bottom for Bitcoin. So obviously, the market has this particular psychology. Investors come in and out at particular times, and they tend to repeat in cycles, just like your boom bust cycles. They have a particular pattern for Bitcoin, and we carved that, and we're waiting for the volumes to ramp to complete the sort of run up pattern. And on having said that, the volumes on chain are not as high as we typically would have expected, and I think that's due to a lot of these off-chain layering transactions that we're seeing. And so, yeah, I mean, as far as that, I mean, I
Makes
think
sense.
there's sufficient. I think there's sufficiently healthy investment volume going on to say the bottom's in and that we're in a bull market. Um, so yeah, if that's the definition of health,
Yeah,
um, yeah,
price wise, yeah. Going back to
price wise, yeah.
yeah, to hodl though, you talked about when that 6K floor got brought out or dropped, right? And price gets down to 3K, down to capitulation. I had Delphi Digital on an episode, I think a month ago, and one of their most fascinating studies for me is when they called a bottom in Bitcoin, or they expected a bottom to form Q1 2019, obviously before it happened. And the way that they got to that was by looking at how old coins, or whether or not a holder of, like, let's say 2 years was exiting versus very fresh holders, or coins that were very new in
Mm.
wallets. And you have a chart up on Woobull. I'm going to share it on the screen right now. Bitcoin hodl waves. Do you see something similar? Does that look at something similar where during capitulation, maybe very fresh hands are selling, or there's a lot of coins that are changing hands, but kind of the longer term holders are accumulating or not moving? What do you see there?
Yeah, okay. I was actually watching the hodl waves as well. You can see them doing these particular ways. I think Delphi did a very in-depth study there, um, and ultimately it proved correct. We actually, it was interesting with this is that we're very bearish. I know Murad and David Poole and I were all in agreement that um, like the worst has yet to come. But as we were developing our own indicators, some of them started to say the bottom was in. And I think if you remember, like there's a chart on our site called with different price models, and David was one of the ones that came up with delta cap, and that tended to catch nearly all of the Bitcoins, well, all of Bitcoin's bottoms. And then I started to do some stuff around volume profiling
Mm-hmm.
of um, of of uh, of Bitcoin against its chart, which is it uses volume, but it's less price sensitive. Um, like I should say, it's less. Sorry, it's less sensitive to the drift in your volume estimates, and it ended up showing that like while we were really bearish, we found that the data we were using may be drifting and it was wrong. And it turned out the data we were using was from blockchain.info and it was lowballing the estimates. And I actually, and bring it back to the topic at hand,
Mm-hmm.
I actually used hodl waves to find out the drift. And so the bottom hodl wave of that we're looking at, those are like coins that are sitting in wallets less than 24 hours of age, which means that they moved in the last 24 hours, which also means that they're a proxy to um, uh, volume. You
Yeah,
know, if
sure.
coins have moved in the last 24 hours, it's the 24-hour volume.
Yeah.
So I managed to use that, and it was very useful to go, okay, we're getting a significant drift here, and come back. And so there in itself, that was instrumental for us to calling the bottom before it broke out. And yeah, we have looked at this sort of stuff, and we're constantly looking at other stuff like dormancy, which this kind of has, right. This is like the age of the coins. We look at Bitcoin's days destroyed and different views
Mm-hmm.
and whatnot. So that kind of stuff is really important because age is a great one for discerning um, who is buying in, and the age of the coins gives you an indication of um, how savvy that buyer is.
Yeah.
Um, yeah, I'd even say like people are selling. Well, they say, when people say people are selling, the market is selling, the market is buying. This is untrue, right? When you think about it, um, for a coin to transact, whether it's on exchange or on chain, there's always a buyer and there's
And a
always a
seller.
seller.
Yeah.
There's always match. So the question is, when we say the market is selling, what we're really saying is the smart money is selling. and the new money is buying. And when we're saying the market is buying, we're saying the smart money is buying. Um, so we're trying to follow who's the smarter one, and the age of the coins tells us a little bit of who's the smarter one in the market.
Yeah, that study, I originally caught on to, like I said, from Delphi, but now kind of researching and looking at this morning and going back at how it's been used. That's one of the coolest charts to me, and just conceptually past MVT. I think I really like this huddle waves, and then also what Delphi did there. I'm going to try to track that going forward. Make a little note of that. You mentioned before we kind of wrap this up, I have one or two more things I want to hit, but in terms of whether or not smart money is buying or smart money is selling, you said it probably doesn't make sense for a lot of people to be trading, especially when they're playing with leverage on already extremely volatile asset. You had a tweet a little while ago. This was earlier this month, and you talked about VC being a 0 to 1 game, trading being a zero sum game, and Bitcoin is a zero sum game superimposed on a 0 to 1 game. What does that mean there in terms of how can Bitcoin kind of be zero sum, but also be um, kind of everyone can kind of win, or the pie does get bigger? Can you kind of elaborate on what you were looking at there?
Yeah, it's when we talk about a 0 to 1 game, it's popularized by Peter Thiel, and 0 to 1 is really about adoption, bringing a new technology into being, from zero into being everywhere. And so all adoption, all technologies that come out and get adopted follow what we call an adoption S curve. And we've seen it from radio to TV to smartphones to now Bitcoin. And really, Bitcoin's around 1%, maybe 1 to 3% of the world has bought in. I'll just say 1%. The best research we've seen puts us around a doubling every year is the adoption of Bitcoin. So we double every year. Obviously, that's going to hockey stick up, and then eventually we'll taper as we reach a saturation. So there's an SBN S curve, and it just so happens that as you do this S curve, we're bringing, when we're saying adoption, we're saying people are adopting Bitcoin as a store of value. So they're bringing in their capital. And what you see is the price of Bitcoin going up and up and up. And you'll see this really long, grand arc, which I call the Falcon 9 rocket launch. It follows that arc into the sky. Each layer, each altitude climb is a 10x. And so that's the 0 to 1 game. It's just like going from $1,000 for all the Bitcoins in existence in 2009 to now around $150 billion for all the coins. And we're on track to go to possibly 8 trillion, maybe even higher, to match gold or beyond. And that's a 0 to 1 game. And obviously, everyone who has looked at the price chart of Bitcoin can see ripples on top of that. Those ripples are caused by trading.
Yeah.
And that's a zero-sum game.
Yep.
It's
Yep.
a whole bunch of people around a table trying to make bets on which direction will go next, and whoever's right gets to take the kitty for that day. If you're in the market, in the exchanges, you're playing the zero-sum game. When you win, someone lost. But if you're playing the hodl game and you bought your coins, you put them in cold storage, and you come back to it a lot later, then you're playing the 0 to 1 game.
Do you think do you are you still kind of tentatively thinking that your original projection when you first got of in 12 years, kind of just like the MP3 phase, it'll be in everyone's hand, and in 12 years Bitcoin could be at that trillion or kind of where gold is. Do you still think it's kind of in line with that? So like 2024, is that still what you're thinking?
Yeah, I think so. I I think we're on track. When was it? I was 2013. So yeah, 2025. Yeah, I think that this cycle will get us past the $1 trillion cycle, and then the next cycle will be the one that takes us to breaking the gold market cap. So if that's it, yeah. And so, I mean, these cycles are hard to predict, but I know a
Sure.
lot of people are trying to pick them um, according to their perfect numbers. But I think we've got another 2 to 3 years of up to go. So that's 2022. So yeah, maybe 2026 seems like a year for another bullish top phase. So yeah, that's
Okay.
about
Okay.
right. That's
Yeah.
about right. I think we'll break that. Yeah.
I'm not going to ask you to predict any number on any certain date. It's always funny. I know
Thank
that
you.
that's the that's fun for the headlines. I said the same thing to Arthur. I said, you know what, people are going to have a lot of fun with this. There's going to be a CoinDesk article about it, but it's just entertainment. The one thing that I will ask you before we wrap this up and get the last question out there is, you're one of the only analysts I've seen. So we were just talking, another 6 years out or so. You're one of the only analysts I've ever seen that publishes a 10,000 year view for Bitcoin. Can you break that down? Because it's one of the coolest charts. I'm going to pull it up for all the viewers here on YouTube. For everyone else, we'll explain it. But what's the 10,000 year view for Bitcoin? I've never seen someone project that far out, but it's actually fascinating in looking at how fiat money relates. So what's that about?
This is a tip of the hat to Stuart Brandt, who's head of the Long Now Foundation. You know, they like to take a 10,000 year view of history. And I really like that kind of, we're so hyped, yeah, even. But like to think about things in the long view is probably under practiced. And so like it was dwelling in my head for a while to zoom back of where we sit in cryptocurrency and the greater backdrop. And of course, the greater backdrop um, of crypto is money, right? And
Hmm.
money's been around since civilization has been around, which is roughly 10,000 years. And so when we look at civilizations, we really have to look at the great ages, right? We went from hunter-gatherer to the great first agrarian age, which brought the the original villages and cities, and then we had the Industrial Revolution, which created a much more complexity of life, um, and then now we're undergoing this big, massive transformation into going into the digital age. So we're in the
Sure.
post-industrial revolution, and so like where do we sit with this? Is we've always had um, like precious metals, not always, but like I believe for 6,500 years we've had precious metals as being the token in which we had that backed scarcity. It was hard to print more of gold, silver, copper. And so, when we went to the Industrial Revolution, civilization became a lot more complex. And you can see we went onto the gold standard. We traded paper notes, which could
Yep.
circulate faster. We could expand the money supply, but still be tagged to a measure of scarcity around that gold locked up in vaults. And that was the money of the industrial age. And when I look at where we are right now with going through the internet, and you look at all the largest companies in the world, they're all digital. It's the Googles, Facebook, it's our FANG stocks, Facebook, Apple's. And the interesting thing about it is that um, we until Bitcoin, we never really had a anything on the internet that could be scarce. So and that's how I describe Bitcoin to people, is that let's not get into the technicals of how it works, but really someone just figured out how to make a um, internet scarcity. And so we're going through this phase where um, we're learning to trust it, and it's proving to be a store of value, and it's natively digital. And once we have a natively digital store of value that can be transacted on the internet via code and programmable, and so when you have something that's native to the internet, that's a digital age money. And so that chart really, that picture really just shows that long-term trajectory of if you want to zoom back or zoom forward in the long arc of it. If we're in a digital age, we really want a digital currency, and this is our first internet native digital currency. And so I think I said bankers say it's a bubble, technologists call it a disruption, but students of history would call it the dawn of the digital age. And that pretty much summarizes that chart. Yeah.
That's epic. That's epic. A
Yeah.
really good way to describe it as well. I really like that one. Wanted to bring it up. The last thing I'm going to ask, because I'm just going to leave it on that question. You crushed that. I don't think you can get any better than that. Was where can people get in touch with you, man? So you have obviously Willy on Twitter, or Willy Woo on Twitter, Woonomics, pardon me, and then you have Woo Bull. Anything else? Anything else you're excited about with Woo Bull, or anything that people need to know about? Any shout outs that you want to make before we wrap it up?
Yeah, okay, right. So, yes, definitely Woonomic is Twitter with most of my activities. Some of the longer reaching articles I will go back and start publishing a bit more on my blog. Obviously, you can follow our fund on, I've got to find out what that handle is.
Adaptive Fund, yeah. Adaptive Fund.
Adaptive Fund. Follow us on that. You can go to our site, adaptivecapital.co, and we've got a whole list of our research and articles on there. I see a few people tweeting they're reading through it and getting value out of it. And also, one of the things I'm working for, which is the next regulated US exchange. And so if you guys want to try it out, we're in alpha right now. It's very, very much a closed alpha, so you need a code. If you go to mycharts.woobull.com, which all of these charts we've been talking about is available there on the homepage. If you refresh it right, there'll be a link called Level, and you can try. You'll get a code to access the alpha, and we'd love your feedback before we go to beta.
Cool. Very cool. I'm sure there's probably quite a few traders on here listening that'll jump on there. Willy, thank you so much for coming on, man. This was epic. A lot to digest. Excited for the next 10,000 years of Bitcoin as opposed to thinking 1 year out, man. Cheers. Thank you for coming on.
Okay. See you in the next 10,000.
Yeah.